Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, August 10th. Firstly, to the general performance of the various asset classes and just looking at the VIX quickly, but to the equity space. And the equities were down across the board through all of the indices, the major indices. Firstly, the S&P was down 0.29%. The worst performer was the Russell 2000, down 0.69%. The Nasdaq 100 was down 0.26%, and the better performer, the Dow 30, was down 0.2%. We did see some flow of capital into the alternative asset classes, with the bonds up 0.39%, and the gold ETF here was up 0.47%, and also just looking at the VIX indicator up 3.34%. So some fear entering the market in a minor way, not strong at the moment, but perhaps we are seeing the start of a flow of capital out of equities into alternative asset classes, but we will need to look at the charts. And just looking at the various sectors, and we can see the energy sector was the strong underperformer here today, down 0.8%, with oil futures falling today, being sold off, continuing to be sold off. The financials also came off, and we had a flow of capital into consumer staples and into the utility sector, suggesting that we may be seeing something of a new flow of capital into those sectors as a potential safe haven. Just firstly moving to our charts and just looking at the S&P 500 on the daily charts with Ichimoku, and we see selling coming into the market, a change of trend confirmed today, and that was off the back of these two small bodied trading candles where we were making these highs, but we had very little net momentum. And then for that final day, the formation of a doji candle certainly did see very little net progress made, and some downside price rejection, with the buyers losing commitment at these higher levels. Sellers have taken control today, and this is probably quite healthy for this market in bigger picture terms. If we do see the trend continue to the downside, looking to the Tenkan Sen at 2167 to continue to hold the support, but also at that window that was opened up, it has held as support in the recent past and may continue to do so. And what we want to see, even though we do see the market trading through there, excuse me, we want to see the market actually close through there to negate that window. If that does occur, we could end up trading down to the 2134 level or to the Kijun Sen, where we could find some equilibrium in the medium-term time frame around that 2130 level. And just looking at that pattern, that's forming something of an inverse triangle, almost a broadening top, but broadening tops tend to be much larger patterns in on a bigger picture scale, whereas this certainly could be significant. And as I've mentioned previously in the past, they are very, very difficult to trade because you don't know when the pattern has completed. We could end up trading down through the bottom of this barrier and then rally on another leg in this pattern. They do tend to have 5 legs, but they can go on for longer, they can be shorter, so very, very difficult to tell when this pattern is completed. Now, just placing our Fibonacci retracement tool, and we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame uptrend. And here we see the market interacting with the 38.2% level, some price rejection from there, but the sellers have still closed with control. This solid momentum that the market had built today suggests we certainly could see the market continue lower. But if we look at where the Tenkan Sen is trading, it corresponds with the 50% Fibonacci retracement level, and it does suggest that there is good solid potential for the sellers to lose some commitment around that region, and that's where we could see this first time frame downtrend turn around and a new first time frame uptrend initiated. So just watching how the market, we don't ever preempt, that doesn't necessarily mean that we will see a turnaround in the trend around that level, but what we do is react to the market, how the market responds to that level. And if we do see any weakening in the selling price action, or if we see any strength of the buyers around this 50% level at 2167. Also, just looking at the bands, and the bands continue to squeeze even further, and this is suggesting we have to be ready for a fast and strong trending move. Very, very tight squeeze in volatility, and this suggests that the next move could be quite dynamic when it does occur. Importantly, we did trade outside of the upper band with no follow through. We traded through there in a bullish manner, taking out previous swing highs, but the lack of follow through did suggest that we weren't going to see a strong extension of the trend to the upside. Now we have the market trading back within the bands and finding some equilibrium, testing down almost to the middle of the bands. We do need to continue to watch that middle of the bands there at 21.69 to hold a support, or if we do trade down through there, watching initial support down at the 21.62 level at the lower band. If we are going to see a development of a trend to the downside, we'd like to see a bearish breakout to the downside, strong bearish follow through, and the market taking out this previous swing low at the 21.47 region. Next to the Dow 30, and very similar type of trading activity with the Dow to the S&P 500. Change of trend confirmed today. Similar small body trading previously. Sellers in control, losing some minor commitment. Target here at the Tenkan-Sen initially at 18,416. Possible support coming in at the 18,351 level. We do have solid support all the way down through to about the 18,103 region for the Dow, so likely to find some solid support around one of these levels. Importantly, on this previous swing high that we've just made, we have failed to take out that previous major high at 18,622. So this is something of a failure in the market, and suggesting that the momentum that the market had here previously in this region when we were trending here is no longer reflected in the market at this point now. So suggesting we could see a change of trend in that second turn time frame, and that makes this swing low here quite important, where we're looking at a series of higher peaks and higher troughs, and potentially a series of lower peaks and lower troughs, with a peak here, trough, a lower peak, and then potentially a lower trough if we do trade down through that level at 18,249. So it does make it quite important. But even if we do trade down through there, we do have this solid support through these zones of support, extending firstly down to 18,103 and then down to about the 17,687, which will correspond in the next few days with the Ichimoku cloud. And just looking at the Dow 30, and over the last 4 days we have seen the market testing around that upper band and unable to close up through there, and this suggests that this market is very much different than we saw with the S&P, where the S&P had been at least trading outside of the upper band. So it suggested the S&P was a stronger market only slightly, because we didn't see any strong trading activity outside of the bands. Here that upper band has held as resistance, and we do need to continue to watch it. It trades at 18,557, but importantly, the middle of the band's holding a support 18,495, no, just below there, roughly 18,482 is where that trades. So watching that area support. If that area is breached, lower band may come into play. 18,407. It will either hold as support or will breach down through there. For a solid bearish market to form, we need a strong bearish follow through, strong bearish breakout, strong bearish follow through, and the previous swing low here down around 18,250 to be taken out. To the Nasdaq 100, and change of trend here confirmed. If you recall, yesterday we were looking at the rejection on this candle, testing close to the 4816 level. The sellers taking control on a small body candle, suggesting potential for a change of trend, and we have seen that confirmed today. We have seen a greater loss of commitment on this candle. The market just closing slightly below the midpoint level, suggesting that sellers have taken control. It's only weak control, however, so not a lot of strength from the sellers, but in terms of the net momentum between the open and the close, that is fairly strong. And we do have this larger black body candle forming, in the largest black body that we've seen for the past week or so, so suggesting that off the back of the build of that downside momentum in net terms, we could see the market trade lower. Now we do have a window that was opened up, and it will strengthen the support around the Tenkan-Sen indicator, which trades at the bottom of the window around 47.50. So potentially some strong support around this region. If we see a bearish close below there, we could end up trading down through to lower levels, 4659 is one target, and then down around the 4619 level we have another window that hasn't been tested. In terms of Ichimoku, still a solid bull market in all three timeframes, and the Tenkan-sen will be very important here. Previously, we have seen it hold as support, and if it is tested again, it will be interesting how the market reacts there. If we see the buyers return back into the market off there, we could end up trading up through these highs that we've established here previously, trading up through that previous major high at 4816. In terms of the bands, and this really does highlight the strength in the Nasdaq versus some of the other markets that we've been looking at, where even though we're seeing some minor selling coming in, and it is minor at the moment, we are still seeing some strength here by trading above that upper band. The market for the Nasdaq 100 still does have a strong bullish tone. Importantly, we do need to continue to watch that upper band of support. It trades at 4764 at the moment. If we breach through their close within the bands, we could see a retracement back to this middle of the bands around 4699. Just looking at the Fibonacci retracement tool at the moment here, and if we look down through to the 38.2% level, that is corresponding with the upper band at the moment, and does suggest that we could see some support coming in around that region, strengthening the potential support around that area. The 23.6% level has been interacted with today, with a loss of commitment down below there, but the sellers still have control. We're not seeing any strength in the buyers here, so there is potential for a change of trend here, but certainly not as strong as though as if we were seeing the buyers giving us a better indication. So this does seem as though there probably is a likelihood that we will test down to perhaps the 38.2% level, even perhaps through there. And we do need to watch these levels quite carefully for any loss of commitment by the sellers and a strengthening of the buyers. Next to the Russell 2000, and this certainly was the weakest market today. Very strong selling, larger black body candle, sellers in control, showing some strong commitment by taking out the 1225 level. Resistance coming in once again for the fourth consecutive day around this 1233 region. Strong price rejection from there. Continuing to watch support that has formed today at 1220, previous resistance area, now acting as support. We could see the market bounce off here, but the build of momentum here has been quite solid, and it does suggest we could poke through there. Interesting how the market reacts around the Tenkan-sen indicator 1217. It has an opportunity to hold as support. The previous time, however, that we traded near there, we did trade down through there and test at 1200. So watching whether we test to the round number 1200. To the bands with the Russell 2000, and the upper band just failing to hold as support here. The market just closing slightly back within the band, suggesting that that strong tone that we had seen previously no longer there. The bullish breakout, lack of follow through, suggested that we weren't necessarily going to see strong further development of the trend to the upside. There is an opportunity here for the market to continue retracing, and we certainly could see a retracement back towards the mean here at the middle of the bands at 1214.49 at the moment.